This RealAg Radio podcast is brought to you by new Averio herbicide from FMC, the first pre-seed burn down in Western Canada to combine Group 27 and Group 14 modes of action for powerful broad-spectrum control of the toughest broadleaf weeds. Ask your local retailer today to find out more.
It's time for RealAg Radio on Rural Radio Channel 147 on Sirius XM. RealAg Radio and RealAgriculture.com is your home for insight and analysis of the issues that are impacting your farm business. Let's get real and get connected with RealAg Radio. Welcome to RealAg Radio here on Rural Radio 147, Sirius XM. Shaun Haney, your host here on this Tuesday edition of the show. Hey, thanks so much, everybody, for making RealAg Radio and Rural Radio 147 a big part of your workday. Also, a big shout out to everybody listening out there on the RealAg Radio podcast as well. We are getting to the midpoint of January. Hard to believe. Yes, indeed. We are in the depths. We are into meeting season, conferences, trade shows. It is all underway. Our team is all over the place. I am right now in Pasco, Washington, or actually I'm in Kennewick, Washington, in the Tri-Cities. And I am speaking today at the Cropping Systems Conference that's put on by the Pacific Northwest Direct Seed Association. Some great wheat farmers from across not only Oregon, but also Washington State. And they're going to have a lot of fun here today, so I really appreciate that. Tomorrow I'm off to, well, actually later today, I'm off to Sioux Falls, South Dakota. Going to be speaking at the South Dakota Ag Business Meeting that's happening in Sioux Falls there. Looking forward to that. We got stuff happening this week. Lyndsey and Amber from our team, though, they are in Saskatoon, Saskatchewan for Crop Production Show. Yes, the Crops Forum is on. Lyndsey's at that. She's doing a panel on Wednesday. Amber's on the trade show floor, running around, talking to people in different booths. And so they have got Crop Production Show covered. They're going to have some great stuff from that event. All those videos will be posted, of course, at RealAgriculture.com. Thursday's show here is going to be Lyndsey's panel. So if you miss it, you're not at Crops Forum. We're gonna play the audio for you here on the RealAg Radio show here on Sirius XM, as well as the RealAg Radio podcast. Now, what is lined up here for today? Okay, we've got Ted Sefried from Zaner Hedge. He's going to talk about yesterday's bearish, very bearish. Like it's roaring bearish USDA report. We've got Charlotte Greenshields from CANTERRA Seeds here for a product spotlight. Craig McLaughlin is with the beef farmers of Ontario to talk about some of these new traceability potential rules that are going to be put in place and the industry pushing back. People concerned about CCIA, people concerned about CFIA, what their recommendation is going to be. And CFIA, there's a lot of acronyms there. CFIA also saying they're going to pause. We've had politicians speaking up. Boy, things are heated. We've got Darren Bond with Manitoba Agriculture. Kelvin caught up with him last week in Manitoba. He's going to talk about farm level inflation and 2026 margins. So lots to chat about, lots of topics to cover here today on the program. Now, if you have any feedback on today's show, we'd love to hear from you. You can send me an email, shaney@realagriculture.com. You can also call or text the RealAg feedback line. Keep that feedback coming, everybody. The number is 855-776-6147. I got a ton of feedback on the discussion last week about institutional ownership of land. And I will tell you, so far, if I was to put a scorecard together, now my question is if the U.S. bans institutional single-family home ownership, is that something we should think about with farmland? Is that something you'd be in favor of? Let's discuss it and let's debate it and let's talk about it. If I look at the scorecard, a lot more of you thinking it's a good idea than a bad idea. So if you missed last Wednesday's show, check that out. I also posted a column at RealAgriculture.com. And we're talking about the bear market USDA report. I recorded that interview with Ted that we're going to play here in a second on Monday night. How about those Chicago Bears, everybody? Oh, Chicago Bears. Bear down, baby. Woohoo. What a game on Saturday. Looking forward to this weekend. Okay, let's take a break. When we come back, we got Ted Sefried from Zaner Hedge. We're talking markets right after this.
Introducing a new supergroup in your fields, a Vireo herbicide from FMC. The first product in Western Canada to combine Group 27 and Group 14 actives, a Vireo herbicide delivers powerful, broad-spectrum burn-off control of early-season broadleaf weeds, including resistant kochia, cleavers, and volunteer canola. This rising star in burn-off innovation works in all soil zones and can be applied pre-seed or up to 3 days post-seeding. Ask your retailer about new Vireo herbicide from FMC.
Canola is more than just a pretty face in the prairie landscape. It's a big business, both here and around the world, that requires you to be informed and up to date on everything it takes to grow a successful crop. The Canola School on RealAgriculture.com has an expert library of video resources covering markets, agronomy, and more to help you grow a healthy and profitable canola crop. Visit CanolaSchool.com today. Brought to you by BASF Canada and Invigor Hybrid Canola.
If you're applying a low-rate N stabilizer, you might be falling for a losing strategy. Low-rate products promise great results, but may lack the potency of higher active ingredient concentrations, so great isn't always what you get. Don't put yield at risk. Put your trust in proven solutions. Anvol Nitrogen Stabilizer, Super U Premium Fertilizer, and Tribune Nitrogen Stabilizer from Koch Agronomic Services. These products offer higher active ingredient concentrations imitator brands can't match. See the difference at defendyourn.ca.
We got a USDA report out on Monday, and lots of ways to describe it. I think maybe the most accurate is it's pretty bearish, baby. Here to break it all down is Ted Sefried from Zaner Hedge, based out of Chicago, Illinois, the home of the greatest football team on earth, and everyone's just finally realizing it, the Chicago Bears. Ted, how are we doing?
Oh, yeah, we're doing good, Shaun. Go Bears. That is like the best thing that we've got going on right now. Because as you mentioned, wow, that was a very bearish report, right? So, I mean, the Bears are on a roll in lots of different facets, I suppose. But, man, this is one of those reports where you had so many different data points, right? And so you're going through quarterly grain stocks, you're going through last year's production, you're going through changes in demand, you're going through South America, you're going through, ending stocks. And man, everywhere you looked, it was just bearish number after bearish number. There really wasn't really anything positive to take away from this report. I think the only silver lining I could come up with, and this is a stretch because you can look at it multiple ways, but if you look at the quarterly grain stocks number, we had the largest, it's demand, but indicated disappearance for September through the end of November for corn that we've ever seen by a pretty big margin, right? That demand number increased 710 million bushels from the same quarter last year. So you can say that demand for corn is really, really hot. And while the USDA was not able to increase export demand on this report, they actually trimmed FSI slightly without reducing ethanol, which is kind of a rare thing, but they did that. And they did add to feed and residual, which is the one everybody thought, oh, they're going to have to cut that. But also everybody thought that we were going to see a lower yield. Not one single analyst was looking for an increase in the national average corn yield, and that's exactly what we got. So I guess, yeah, you could say, wow, we had a lot of demand in that quarter. Okay, but on the other side of that, you could also say, well, maybe a lot of this demand is coming at a different time of year than it normally would be, in particular looking at exports. Yeah. Because the USDA did not raise the export demand. Whenever the USDA raises production, they look to find other ways to sort of offset that a little bit by raising demand. They did raise demand, but it was in feed and residual. They couldn't raise the export number. That was really rather disappointing to go along with really all the other things. The big shock, aside from yield, also was in production. Another 1.3 million harvested acres. Oh, boy. I mean, look, the production number came in 450 plus million bushels higher than the average trade guess. And when you have something like that, Shaun, there's really no way around it. I mean, this is just a shockingly bearish and unfortunately probably game-changing report.
So game changing to what? What like where do like? There's lots of stuff to break down here, but I want to tee off on that. Like game change to what?
Yeah, well, look, corn has been trading absolutely sideways in a fairly tight range since October, with the idea of, well, we got to wait till we get to this January report, because with all the reports of southern rust, and with all with the dryness that we saw in August and September. We remember a year ago on this January 25 report where the USDA had to lower yields pretty aggressively. And we say, well, we had a pretty similar finish to the growing season this year as we did the year before when they lowered yield. And then add the rust in on top of that. Well, there's a good chance that we're going to see the USDA lower yield pretty aggressively on this report. And then what do they do with exports? And, are we going to have like a 1.7 or 1.8 billion bushel carryover? Is that going to be bullish? And so you had funds that were really flat going into this report, waiting for direction coming from this report. And unfortunately, Shaun, that direction was really negative, right? So it changed the game, and it got rid of the question of, well, are yields going to drop? Do we have a tighter balance sheet? The answer is a resounding no. And so, we had about 100,000 contracts in volume in the first minute and a half after that report came out. And that's not speculators reading the report that quickly and then putting a position on. Yes, you are running some stops, but that's mostly the algorithms that took the report, saw that it was negative. They processed this stuff a lot faster than humans. That was a lot of fun selling, I think, that happened there in the first couple minutes. I really do think the funds really, they were slightly, ever so slightly, from what we could tell, ever so slightly going into this report. But I think today was the beginning of them maybe building a bigger short position. They've been waiting for that direction. They've been waiting for a chart to tell them what to do. This big breakout to the downside that we had today, based on what the report said, I think gives them that direction, unfortunately. And they've got a lot of room to run if they really choose to build on that short position. The one thing that we do have going for us is seasonality. Maybe that keeps them from really pushing the envelope as far as their fund short position. But after multiple months of consolidation and sideways trade, there's a lot of pent up momentum in this market, and this breakout to the downside is not a good sign.
Yeah. So if you look across the contract months on corn, what and I'm not going to ask you to tell me the bottom here, Ted, but what levels are we looking at a potential trade to as you talk to some of your customers?
Yeah, so the big one, March is going to be the leader, and in a big move to the downside, it's usually the front month that leads, especially when we're talking about big old crop supplies. When it comes to December, we still have a growing season in front of us. Yes, we are likely going to have a big beginning stocks number for the next crop, but we still got to get that crop planted. So that's going to be, I'm not going to say resilient, Shaun. It's just not going to be the leader to the downside. The leader is going to be the front. And so when I look at that March contract, we held 420 for the low today, but man, it does really feel like we should go and test that $4 mark. 390 is a big target. So I don't know. I will say that we got really oversold in corn in just one day. That was a big move for corn. We went from being at like 54% on a relative strength index to being in the 30s in just one day. So that's maybe crazy. We don't have, that's wild. So maybe we don't have another massive down day tomorrow. I don't know. I'm just, like I said, I'm pulling at straws here to try to find something friendly.
Yeah, market carefully, everybody. You got to think that we're going to test a 3 handle on that front month. What about soybeans? The crop size barely changed. Carryout jumped. What shifted in the soybean story here compared to we contrasted with corn?
Yeah, look, the big bearish report was corn and yields going higher, right? Soybean yields didn't go higher; they just stayed the same, which was disappointing for the trade. Even though the average trade guess was only looking for 0.3 of a reduction on yield, I think there was a lot of people in the trade that was looking for a similar reduction to what we saw last year. Closer to that 2 bushel an acre reduction. And when that didn't happen, that's pretty unfriendly. In the meantime, the USDA raised the Brazilian production number by 3 million metric tons. Now, the really interesting thing about that, Shaun, is that, last year they really drugged their heels all the way until well after that Brazilian soybean crop had been harvested to raise their production. And that was based on seeing the proof in their exports and oh yeah, that must have been a bigger crop. Even though so many reporting agencies in Brazil and private agencies had been saying that Brazilian number is higher. So for the fact that they're doing it this early, they're just barely getting into harvest there. The fact that they're raising that Brazilian number already, that's not a good sign. That was their justification to cut our exports by 60 million bushels. It was interesting that their language didn't have anything to do with China or really anything about that. It was just, bigger South American crop, bigger South American exports. That's going to lower our competitiveness. So 350 million bushel carryover for soybeans isn't equivalent. It's not the equivalent of a 2.25 billion bushel carryover in corn, but it's definitely not friendly. And I think the trend of a bigger South American crop, the trend of them lowering our exports, make a lot of analysts feel like, 350 could turn into 400 or 450 pretty soon. And if that's the case, we got to find some more business, and the only way to do that is to try to find some lower prices.
Yeah, at least in corn, there's product moving. Exports have been strong, and so that may be like this non-report based, but it does give you a little bit of and thank goodness there has been a lot of exports because
yes.
Boy, this would be a much darker club. But soybeans, it's a kind of a different story on those sales numbers.
Yeah. Well, I always looking for silver linings here, Shaun. And the one that we might find for soybeans could be maybe this is encouragement for China to come in and buy more than that 12 million metric tons of soybeans. Maybe prices will get cheap enough that they do. And if they do and keep our ending stocks level closer to 300 or 350 like USDA said today, all right, well, maybe there's not a whole lot of justification for soybeans to go too much lower if the Chinese start or keep buying fairly aggressively. But if they stop, if 12 million metric tons that's it. Oh man, I still think there's about, at least 50, if not closer to 100 million bushels to come off that export number. Now that the production number is pretty much set in stone at this point, at least until we get to the September quarterly grain stocks report. Man, I don't know. So
Ted, with this inventory, this carryout, we've kind of moved. We need to sort of like, in a retail store, they move stuff. They move inventory to the outlet. We need to move some soybeans and corn to the outlet. we got to clear out some inventory here. We've been looking at these markets like, hey, we need to get these prices higher so that we can, put some profitability back in farmers' jeans. And that's more of a longer term story now. We got to clear out some inventory.
We do. And look, we've been selling a lot of corn, like I was talking about when we were talking about the quarterly grain stocks being by far a record for that time frame. And like you were just saying, exports have been fantastic. The concern that I have is that, global demand at any given time probably has a ceiling. It isn't infinite. Even if prices continue to go lower, it's hard to find more demand for things at some point, right? And you wonder if we really are maxing out demand. Again, I keep harping on the fact that the USDA was unable to increase exports, even though our shipments have been so fantastic, and they raised production. That's a red carpet for them to raise exports, and they didn't do that. Yeah. That's a big red flag for them to be raising the feed and residual. That's basically the USDA saying, look, this is the only category that at this point we can raise. I think that was a sign or a signal from the USDA saying, we feel like we've maxed out as much demand as we can get here. And so clearing out the inventory might take some work. And it really makes you wonder what this is going to mean for the acreage mix for this upcoming growing season. Yeah. I mean, I don't know. Up until today, I think a lot of us were thinking, maybe there could be 1 million or 2 million acres shift back towards soybeans, but we're still going to have, something in the mid-90s for corn. Another really big corn crop or planted acreage number for corn. Mm. But I mean, this balance sheet's telling you we don't need that. Yes, demand is good, but we're going to have massive beginning stocks apparently, and so I don't know. normally we have this seasonal kind of rally into planting in order to encourage acres. But if we don't start to have a big weather problem in South America, we might do the counter seasonal thing of market asking for, hey guys, maybe don't plant these acres, don't max out the acres this year. And that brings us to, what does that mean for our February average, i.e. our crop insurance pricing? Oh man, I mean, look, this is not a great setup, right? This is not a great setup. I guess the only thing that I can say, aside from, look, we got pretty oversold just after one day, was, maybe once the dust settles, and I don't think it has, but once the dust settles on this report in a few days, are we going to look back and say, all right, that's out of the way. That's going to be the worst news that we get maybe all year. Maybe it might not be, but hopefully that's the worst news that we're going to get maybe all year. And then maybe we start to say, well, what if that rust comes earlier this year? I mean, look, that's the thing. When we were out on crop tour with Chip, and I was on the West, and I'm usually on the West, all but 2 years in my 11 years I've been on the West. Anywho, we were covered with rust coming out of fields on the third week of August.
Yeah.
And when I was talking to my guys in Texas about it, they're like, it's too late. That rust came too late. That crop or that corn up there is pretty much done. Might take something off test weight, but it's not going to have a profound impact on yields. In the meantime, you've got agronomists in Iowa saying 30% reduction. And I couldn't really kind of put the two together to reconcile it, to say, well, this is exactly what happened. I didn't know. We had to see what the USDA finally came up with here on this report. And it turns out that rust didn't have a profound effect. Yes, they did lower Illinois and they did lower Iowa, but the increases that we saw everywhere else offset that. And so it came late, ultimately didn't have that profound effect that we thought it might have. But what if this coming year, that rust starts to show up in end of June or into July? And really, that could be a problem. I'm not saying it will, Shaun. I don't know. Yeah. I'm not an agronomist. But these are the things that the market at some point should start to question, right? Like, we just came off of a record yield by a long shot. Can we do this 2 years in a row? I don't know. Are disease issues going to actually have a major impact this year? Yeah, I don't know. So, those unknowns, those what ifs, and those concerns at some point might start to be more of a focus than the big shock of, oh my gosh, we had a record yield by a ton, and that yield didn't come down, and ending stocks didn't come down, and now we're well over 2.2 billion bushel carryover. And yeah, that's what the market is focused on today, because that's the news that we got today. But at some point, I'm hoping that we focus more on not necessarily the positive, but the unknown. And unknown uncertainty generally leads to higher prices until we do have a better idea.
Yeah, I got to sneak a question about wheat. Okay. I think we had acres higher.
Yeah.
What's the thought on wheat?
Well, acres were higher than the trade guesses, and by the way, they were pretty spot on to what my Zaner Ag Hedge guesses were.
Nice.
But I mean, still about 500,000 acre higher than what the rest of the market was thinking. And I understand the market thinking of, wow, wheat prices are not good. Why are we planting so much wheat? I don't know. The problem with wheat, Shaun, is that, okay, acres went higher, so therefore carryover went higher. Our domestic carryover, 930 million bushel. We got a lot of wheat, and yes, our exports have been good, but the USDA made it pretty clear today that they don't expect our exports to really be a lot higher than what their estimate is. And the reason for that is because they have had to keep raising the global production on wheat to the tune of over 20 million metric tons at this point, because we haven't had any sort of production issues really in any of the major exporters this year. It is that rare year where everybody, sure, there's pockets and things like that, but everybody is doing better than expected on production, really everywhere. There's a lot of wheat in the world. That global carryovers is really ballooned over the past few reports. And that's just going to keep a lid on the wheat. Our domestic carryover is big. The global carryover is big. Production has been big. Argentina's production was whopper. And that's just tough, right? And I thought the biggest hope that we had was for the row crops to lead the way higher and to see some short covering, because the funds are really rather short. Funds were really short in wheat coming into this report. They weren't really short in corn or beans. So I figured if we could get a rally in corn and beans, maybe we'll start to see that short covering happening in wheat. And you got at least you had an attempt at a bottoming formation in wheat. So I was a little bit optimistic. But after what we did today, and after really kind of taking away a near-term bullish story for the row crops, man, it's a tough argument to say wheat needs to go higher.
And again, the mentality, you got to think the mentality of those kind of traders, those funds, they're looking for the momentum. So that it's a pile in sort of mentality, right? You try to move that market in your direction, and you need reasons to lift those positions. And today was not it. It was not it at all. Okay, no. Final question here. Bring it back to the kind of the farm gate level. What's the kind of a marketing adjustment for producers to keep in mind that are listening here, based on what we heard after this report?
I think the time to wait and be patient, it's over, right? I mean, the hope was that we had lower yields and tighter balance sheets on this report, and we would go higher. You would have a breakout to the upside finally in corn, and soybeans would build off this near-term low that they have, and hey, bigger recovery. And that seasonality that we have for higher prices. I think today you had outside reversal, lower days. I mean, we got above the previous day's high, closed below the previous day's low. Some technicians will call that a key reversal. In my book, it's not technically that because we didn't set contract highs. But either way, you had sweeping outside reversal down days in all three major wheat, corn, and beans. That tells you that, look, the time to wait is over. We need to be looking for opportunities to get more sold. Hopefully we had something in place, bought puts, Mark Gold, something, in place. But if we didn't, we need to be looking for those opportunities because I think, again, that hope for a bullish report, that's behind us. The hope for seasonality, this report gives us a reason to feel like seasonality might not be a strong correlation this year. So looking for any bounces to sell cash, HTA, or sell futures, any of those, one way or another, sell rather than buying puts. And then we can create a synthetic put by re-ownership calls, buying calls, looking for that summer rally, looking for some reason to see some higher prices. But at this point, I think the time to wait is over. I think we need to be more aggressive with our sales, unfortunately.
Yeah, we got a crop to put in. Coming up quick here, create some cash flow and live to fight another day. Ted, really do appreciate you joining us here today. All the best to you. Keep up the great work at Zaner Ag Hedge. And, of course, man, go Bears.
Go Bears, brother. Woohoo!
This segment of Real Ag Radio was brought to you by Oxbow, the latest innovation from New Farm, a versatile broadleaf in-crop herbicide powered by Duplasm technology. Oxbow is your workhorse on resistant kochia and other tough weeds. You can find out more by going to newfarm.ca. Now we've covered the markets with Ted Sefried of Zaner Ag Hedge. We're going to continue, and next we got a product spotlight with CANTERRA Seeds coming up right after this.
Summer cypress, fireweed, burning bush, railroad weed, red belvedere. With more aliases than Jason Bourne and a reputation for developing resistance, kochia's one of the most invasive and destructive weeds in the world. Thankfully, there's Corex 2, a pre-seed herbicide from Corteva. Save your cereals with 2 powerful modes of action and the ability to add glyphosate to control kochia and other difficult broadleaf weed. Ask for Corex 2 at your local retailer.
I'm Lyndsey Smith from RealAgriculture.com. Join me Monday nights for The Agronomists, a 1-hour live and interactive show broadcast across YouTube, Facebook, and X. Monday nights at 8 p.m. Eastern, I host expert agronomists from all over the country to give you answers to some of the toughest agronomic questions. Join us live or catch the replay Tuesday morning. That's The Agronomists with me, Lyndsey Smith, Monday nights live at 8 p.m. Eastern.
If you're serious about agriculture, Real Ag's got you covered.
For over 10 years, we've listened to and shared what producers have to say about everything from policy to agronomy from coast to coast.
Keep up with the latest in Canadian agriculture at RealAgriculture.com through daily newsletters and check out our YouTube channel.
Thanks for joining us in the Real Ag community as we continue to cover and serve North American agriculture.
And welcome back to RealAg Radio. It's now time for a product spotlight with CANTERRA Seeds. Joining us right now is Charlotte Greenshields, who is based out of Saskatoon. How are we doing today, Charlotte?
Good.
Hey, great to have you here on the show. There's a lot of exciting things that are happening at CANTERRA Seeds. And most notably, I think, is CANTERRA Seeds expanded its pedigreed seed offering last year by bringing in Alliance Seed into the company. What does that mean for farmers looking at pedigreed seed options this season?
I guess the biggest thing is, it's really expanded our portfolio. There was lots of complements, fills in lots of spaces, and different things for different growing regions, depending on what farmers need and what they're looking for.
Yeah. And when farmers are looking at, say, a crop like durum, for example, what really stands out in terms of performance and production on the farm?
So we have, I guess, 3 offerings between the 2 different brands. From the Alliance Seed side, we have the AAC Weyburn, which is a varietal blend. So that's got the orange blossom wheat midge tolerance, as well as the wheat stem sawfly management as well in there. So it just kind of covers you in both areas. We have CDC Evident, which is also from the Alliance Seed side. So that's a brand new high yield potential, look for the growers that are looking to really push yield, but not give up on the, agronomy type area. Then, it covers off that. And in the CANTERRA Seed side, we have AAC Donlow, which is some of the best fusarium head blight resistance and consistently low dawn accumulation. So it makes it a strong fit for those, potential higher disease areas.
Yeah, it really is about having that full package, right? Yield is a component, and it's critical and cannot be ignored given your soil type and growing region. But there's also the other part of the package that comes with that variety that you need to pay attention to those things as well.
Yeah, for sure. I mean, that's the biggest thing, right? Durum is getting, we'll say, pushed boundary wise, farther and farther north. So, different growers are looking for different things within different soil type zones, and, obviously different, issues are coming around with, things like midge or sawfly, things that maybe we hadn't seen for a while, but within our portfolio with both brands, we kind of have something for everything.
Yeah, great stuff. Okay, so if farmers want to learn more about choosing the right durum variety, or honestly, any pedigreed seed variety across all the different classes for their farm, where can they find you at Crop Production Show this week, which is hard to believe?
So we're at the CANTERRA Seeds Alliance Seed booth, which is in Hall B in Prairieland Park. Or you can also check out our website, canterraseeds.com or allianceseed.com.
Yeah, you looking forward to Crop Production Show?
Yeah, it's always a very busy week, but yeah, it's always really good to have those conversations.
It is a great opportunity to be able to connect with farmers. And I always find from my past working in booths, you're obviously there to talk about, you got some message to talk about, but you also learn a lot from the people that are coming in and telling their stories about their experiences with not only CANTERRA pedigreed seed, but also some of the canola hybrids as well. It's a great opportunity to hear from the growers.
Yeah, for sure. Yeah, you hear, what the current things are, what they're looking for, where we can fit on their farm, where we would fit in the future, what we should look for to expand our portfolio, all those sorts of situations.
Great stuff. Now, if you aren't going to be at Crop Production Show in Saskatoon this week, you can also go to canterra.com, or of course, walk into your local retailer or local seed grower and ask them about CANTERRA Seeds. Hey, Charlotte, thanks so much for joining us here today.
Thank you.
We'll be right back on RealAg Radio, Rural Radio 147, with the rest of Agronomic Monday right after this.
Time to get excited about your fields again thanks to Excite Bio Yield Plus. It's a phosphate solubilizing ag biological that works on oilseeds, cereals, and legumes. For 15 years, we've been helping farmers achieve healthier plants and higher yields with our premium liquid inoculants. For more information on Excite Bio Yield Plus or one of our other premium products, call 1-855-948-3246 or visit excitebio.ca. That's XITEBIO.ca. At Excite Bio, inoculants and ag biologicals, it's all we do.
Before you get back in the field this year, spend some time with the Corn School on RealAgriculture.com. Get all the information you need on hybrid selection, planting depth, crop inputs, and more from a wide range of industry experts. A massive library of video content is available on demand when you need it most. Spend your time outside of the field, inside the classroom, with the Corn School on RealAgriculture.com.
Crossroads, Alberta's Crop Conference returns January 27th and 28th in Edmonton. Join us for cutting-edge insights, new technology, and practical tools for today's farms. Grow boldly and get your tickets at crossroadscropconference.ca. Well, in the cattle industry in Canada, there is, people are stirred up. We got stuff happening. All has to do with CFIA rolling out some new traceability protocols, rules, and we don't know what those are yet. But producers are very upset. Politicians are upset to the point where CFIA put a release on Saturday basically saying they were, whoa, everybody slow down here a little bit. They were pausing. Don't exactly know what that means in terms of the timeline of the rollout of this. Consults were back in, I think it was like 2023. And we still don't know what the details are. There is a what we heard document. I read that over the weekend, but there's a lot of details to come out here. But producers are very upset, and conservative politicians like Michelle Rempel out of Calgary was really stirred up on X on the weekend, along with a few others as well, to try to, shed some light and provide some information on what exactly is at work here. What is the intent of these potential new traceability rules? Lyndsey Smith of RealAgriculture had a chance to catch up with Craig McLaughlin of the Beef Farmers of Ontario. Here's their conversation.
I'm Lyndsey Smith with RealAgriculture. Joining me now, it's Craig McLaughlin. He's the president of Beef Farmers of Ontario and, of course, beef producer in Renfrew. Craig, I'm going to ask you to catch us up. For anyone who's been following along on social media, end of last week, quite a bit of misinformation was swirling around new traceability regs. We've ironed out some of it, but I think it's worth a deep dive here on what exactly has happened and what may happen. So, Craig, if you could back us up a little, what sort of prompted the response from the beef industry groups to sort of call out that there was misinformation out there about traceability?
Well, I'm going to take you back in history. I think in 2011, the beef industry approached the federal government and say, hey, you know what? We need a traceability system. If we want to market beef around the world, if we want consumer confidence, let's have a traceability system. So it's been worked on for many years, and there's been slow progress. And, as is built in, and there certainly has been meetings and dialogues, et it all goes with the territory, certainly feedback from industry. They published in Gazette 1, and then there was a public comment period. They got, my understanding, over 1,200 comments. They, weeded through them. How can we tweak this system? How we can improve it? How can we make it affordable, workable, and not slow down the speed of commerce? And then, eventually this has to get off the ground. If you want a traceability system for consumer confidence to export around the world, you will have to implement it at some time, and they were heading for this year, 2026. Now, unfortunately, people, they will say, well, we never heard of it before. And I would back up and say, well, the Beef Farmers of Ontario, we do publish a magazine 5 times a year. We do put out industry updates. We put one out just right before Christmas. Maybe that was poor timing going into the holiday season, but we also have a beef bulletin board. So if you follow the beef industry, talking about traceability is not new. What has happened, though, I think it was people have just ad-libbed what was going to go on, and it already came into effect in January 1st of this year, which is not true. They were kicking tires to get this thing up and going, but basically then what happened? There's a firestorm in social media. I know our office in Guelph at the Beef Farmers of Ontario, lots of questions being directed, certainly directors on the board of Beef Farmers of Ontario. We are doing county and district AGMs in the month of January. This has prompted a lot of questions, a lot of misinformation going around, and there's always the fear of the unknown.
Mm-hmm. And thank you for that, because I think there's several components to this whole conversation. One, there's the entire conversation of what do we have for traceability in Canada? Why do we need it? And what changes over time are we going to see through a traceability system? And we're obviously talking about beef here, but part of these regulations includes changes for sheep, for goats, for other things, for other animal classes as well. And so, me personally, I have had to keep tabs on these through RealAgriculture, of course, but also through being a producer. And to your point, the way the process works in Canada is we have these proposed regulations, we have a consultation period, then the regulations actually get written up, then they have to be published, then there's an implementation phase. So, but I always feel, and I feel like this is what happened last week as well, is that it seems to me the consultation process gets sort of brushed off because they are time consuming. They're not a lot of fun as far as, there's serious stuff that you got to sit down and really think about. If you want to add any thoughtful thoughts to them and those sorts of things. But it always seems to me, producers always seem incredibly surprised when a regulation comes out. But we've had consultation up to that point. And to your point, Craig, from a producer group's perspective, producer groups work hard to try and keep producers apprised of what is potentially happening or consultations. But we still seem to always land here where a proposed regulation or a soon to be implemented regulation comes out and people act like they have no idea. So I guess one of my questions is that part of the pushback you're hearing from membership is that they didn't know, or is it about the traceability requirement changes, proposed changes themselves that are causing issues?
It's a case of both. As far as I think for some, it's a case of, hey, we're going to land on Mars, and I didn't know I'm on this flight. I mean, as far as communications, I think as an industry, we do put out a lot of communications. I did a county meeting yesterday, and, the crowd is, the one person spoke up and said, if you want to be informed, you would have been informed. But there's a lot just don't want to be informed. They don't take the time, and that will always be the case. We won't reach people, and they are totally shocked. I think the other part two of this is, when you look at it and it's going to change my life. It's going to be an inconvenience. And I think a lot of people, it's the fear of change. Agriculture, what's the saying in agriculture? We move the industry one funeral at a time, because we're slow to adopt. We're slow to uptake anything new. We're set in our ways, and that's always going to be the case too. So going forward, yes, give credit to CFIA. This, we have to kick it off the ground sometime if you actually want a traceability system, and it will be a slow implementation happening. It will be a long runway. It will be not about enforcement. It will be about an education, but it has to start at some point.
So we saw that also related in the transport regs, right? We had changes that rolled out for the transport regulations. For the first 2 years, it was an information drive, not a enforcement drive for the transport regulations. But when we hit that 2 years, again, we saw people were shocked to learn suddenly that these rules were in place. So now, the flip side of this is what's actually in the regulations, which, as I can tell, and in conversations I've had, there are still people who feel that the revisions that are in the proposed regulations are cumbersome, and of course there are those that are going to call it overreach. It's my understanding a lot of these would essentially add a layer of reporting movements that we haven't had before. Craig, what are some of the pushback you are getting, or what are the key points in the proposed regs that seem to be causing the most consternation for some ranchers?
Well, I think one of them is restrictions on their freedoms. Like all of a sudden they have to do a little bit more. They have to report, tracing in, not tracing out. Mm-hmm. That will cause obviously grievances out there, because all of a sudden I'm going to have to report numbers of cattle movement coming into my operation, or whether it's, an auction mart, or whether it's a processing plant. And that causes concern. I mean, and obviously there are a certain age group will say, hey, this isn't for me and I can't do this. We have to stay the same. But I'm going to tell you a quick story. I have an employee, he's 30 years old. He grew up with cell phones and laptops, and I asked him yesterday, does this intimidate you? And he said, not at all. And he said, he doesn't feel the restrictions on it. And he gave me a great story. He said, if you want my generation to invest in the beef industry, you want me, time, blood, sweat, and tears, and especially money, why wouldn't you take out an insurance policy on traceability that won't cost you money, but it will cost you some time? Why wouldn't you not put it in place? Why would you want to have, another BSE case when borders close and lose a generation of producers? So I thought he hit it and hit it on the nail on the head. And I told the story yesterday. I'm old enough when they brought in seatbelt laws, and there were a lot of people, grumpy people, saying, I've been driving for 50 years and I have the right to put my head through a windshield. Right. So I'm not changing. But today, society, especially the next generations of drivers come along, it's just common. It's just habit. You just jump in a vehicle, put seatbelt on before you turn on the ignition. So yes, there's going to be a lot of pushback and it will be slow growth, but eventually, if you want to compete with the world and you want consumer confidence, you want a traceability system.
Now, and that's maybe one thing I do want to touch on is, and you mentioned BSE. I'm someone that has been a formative part of my career, and for many people, of course, it has been. And you're right, the younger generation did not go through that, but technology and this idea of traceability it's much more something you can wrap your head around, much easier. But the traceability system that we had in place for BSE, for what it was, actually, thank goodness we had what we did. At the same time, I think as an industry, we've continually been trying to address a true traceability system. We have RFID, animal identification, but realistically, there are still gaps on movement, on finding animals, on where they've been. And I do understand that there are going to be people that just fundamentally don't agree. At the same time, there are also going to be producers who are in this for the long haul and recognize the value in exactly that, an insurance system of being able to not just identify animals, but also be able to track and trace where they came from or where they've been. So from that perspective, Craig, for you, what is the value of having a functional traceability system for Canadian beef?
Well, I'll turn to Australia. They've been a quarter century of traceability. They kicked it off in 1999. Did they have growing pains? Did they have to tweak the system? Did they have pushback? Yes. But they are confident if there's a food safety reason or if there's a disease outbreak, they can restrict it regionally without closing borders. And they have some swagger because they say it has worked well enough now that we incorporated sheep and goats. And their real swagger is we get the premium markets. That mean the European unions. And I have producers saying, well, no, it's because they don't implant. Well, sorry to say, Australia implants a lot of cattle. And yes, and then people will say, well, they don't do carcass washes. Well, companies like Cargill, who have several plants or more than several plants in Australia, they do carcass washes. They capture that European Union market. We can't. That says something right there. I hear beef producers say, you have to go after foreign markets. It drives price. It makes a higher standard of living for us. And when we can't get into the European Union, a country like Australia can, I'm saying there's missed opportunities going forward here.
Mm-hmm. All right, Craig, we're going to leave it there. As you mentioned, meetings are coming up. This is the busy winter meeting season. For all producers, of course, who may be interested, where can they go for more information from Beef Farmers of Ontario?
Well, we certainly go to our website. We have a lot of information on there. Some of the county and district meetings are over, but if you're in an area that you can get to the county and district meetings, come out. We'll have staff there. We'll have directors. We spread out throughout the province taking these meetings in. And you have questions, we'll answer. And, in the end, I will say, producers will decide what is best for the industry, but, and in the end, we'll go from there.
Mm-hmm. Okay. And we will keep tabs on, of course, CFIA has put out a statement. And so we'll keep tabs on where this continues to go, as the weeks go on. But we'll see what the final regulations are and when they roll out. Still waiting for a final word on that. So, Craig, thank you so much for joining me. I appreciate it.
Yeah, I always have time for a fellow farmer.
Really want your thoughts on this. Are you on side with increased traceability rules? Are you concerned? What have you been hearing? What are your neighbors saying? What are your thoughts? You can send me an email, shaney@realagriculture.com. Really love the audience's perspective on this. Hey, when we come back, we've got Darren Bond of Manitoba Agriculture. Kelvin caught up with him last week. They're talking farm level inflation and 2026 margin. We're back right after this.
Whether you're running a farm operation, in a career within an organization, starting your own business, looking for your dream job, operating a company in agri-food, or want to hone your overall life skills, this conference is for you. Celebrating over 10 years of bringing women in ag and food together, join the Advancing Women Conference in Calgary on March 8th, 9th, and 10th. Visit advancingwomenconference.ca for more information and to register.
As you look ahead to the next growing season, there's a lot to consider when it comes to your crop. You need every possible advantage available to you. The Pulse School on RealAgriculture.com has everything you need to make the best choice for you and your farm. On-demand videos with leading industry experts, available anywhere, anytime. Go into the season confident and ready with the Pulse School on RealAgriculture.com.
And we're back here on RealAg Radio. Hey, with deep roots in agriculture, MMP's farm management consulting team helps farm businesses make confident decisions for long-term success. From strategic planning to operational growth, MMP advisors guide farms through challenges and opportunities across Canada. Connect with MMP today to build a stronger future. Learn more at mmp.ca. Well, hey, last week, Kelvin was at a farm meeting in Manitoba. I think it's St. Jean Farm Days. And he caught up with Darren Bond of Manitoba Agriculture, and they talked about some of the farm profitability concerns in 2026 for Manitoba producers. Listen, this some of the details here are Manitoba focused, but this is a wide geographical problem in the cropping sector. And let's hear what Darren had to say.
Darren, inflation, of course, has been a huge story over the last 5-10 years around the world, here in Canada, overall when we're looking at the economy. But when we look at the farm level cost of production increases that we've seen, you've actually put some numbers to it, and it's quite the interesting story there as well.
Yeah, exactly. What we've seen from government sources like, say, the Bank of Canada inflation or Stats Canada, the Consumer Price Index, is around 20% inflation over the last 5 years, going from 2020 to 2025. However, speaking with producers, they feel that it's been a little bit more impactful than that. So we tried to put some numbers to things, and we did put numbers to a number of different items. So like equipment, for example. Every 2 years, our department comes out with a custom rental rate guide on equipment, and we price it, come up with rental rates, and over the last 3 guides, prices have gone up by about 40 to 50% over that time span. And when we look at a rental rate, which I would more equate to a producer's costs in running that piece of equipment, it's gone up that same amount, around 50%. So that is, obviously a lot more than what we've seen with the Bank of Canada, 20% in that time span. But it's not limited to only equipment. We've seen that with parts. I use an example just on our own farm. We replaced tracks on a tractor. In fall of 2020, that price was $10,000, $500 per track. In spring of 25, it was exactly double. That's a 100% increase. It's pretty impactful. Maybe that one is maybe a bit of an extreme example, but I think it's there for everyone to see. We've also seen it on land. According to Farm Credit Canada's Farmland Value Report, over the last 5 years in Manitoba, land has jumped, or the appreciation has been about 50%. So looking at that, we compared Manitoba Agriculture's crop costs of production, which is an annual guide that we do every year, and it's our new 2026 guide is just out now. We look at that same 5-year period, depending on the commodity. Again, surprisingly or not surprisingly, it's about a 50% increase in that 5-year span for costing. So when we look at farm level inflation, the numbers are showing that it's quite a bit more than what the Bank of Canada might be saying, and I think a lot of producers are starting to feel that.
Basically double what overall inflation has been.
Exactly, double, yeah.
So when we look at the 2026 growing season, you mentioned the new cost of production and profitability numbers are out that you guys work on every year. What are we seeing in terms of the profit picture? I know there's a lot of anecdotal discussion about how difficult things are and how there will likely be some more red on the balance sheet at the end of the year, both for 2025 and 2026. Where are we looking, or how are things setting up here, at least for growers, grain farmers here in Manitoba, this part of North America?
When we look at, say, the big three crops, we'll take hard red spring wheat, canola, and soybeans. By acre-wise, those are the big three crops in Manitoba. Generally, what we're seeing with wheat is a little less profitable compared to what we were looking at a year ago. Canola and soybeans are a little bit more profitable. Canola largely because the price prospects are just a little bit better. Again, it depends when you look at different pricing times. And then for soybeans, a little bit better, largely due to because it doesn't use as much fertilizer as the other two crops. Fertilizer has taken a jump. Fertilizer's gone up by 15 to 20%, depending on the crop that we're talking about from the previous year. So that has a big impact on that profitability. Fixed costs are a large component to that profitability. Our guides are showing minor losses in canola, a little bit greater losses in hard red spring wheat, but a slight profit in soybeans. Of course, producers should do their own numbers for their own farm to see where they line up. But we also make sure we include fixed costs, which are equipment and land costs. Those are highly variable amongst farms. Every farm should do their own. But when we consider that in, that's where we get to slight losses. Wheat is looking more and more like a rotation crop, like what we've seen in previous years. So knowing what one's own numbers are is very important, and especially when we're looking at this cost price squeeze or tight margins, something that is not unfamiliar to farmers. We've seen it, we just maybe not have seen it over the last handful of years in the early 2020s. It's something that we need to be aware of so we can make those good decisions on our own farm.
Soybeans, though, we're at the top of the list when it comes to profitability, again, overall using averages?
Yes, soybeans were a little bit better. Largely, again, fertilizer costs aren't as impactful, and the price prospects are decent. And then also in Manitoba, our soybean yield is slowly trending up over time. So we use an average yield of 42 bushels an acre, which is up 2 bushels an acre from our last guide. So that all helps, and a lot of producers will understand too that protecting that yield is going to be very important to attaining profitability in the upcoming year, and that's borne out in the evidence of those numbers.
It feels like over maybe the last 6 months, Darren, we've seen a lot of, I've heard a lot more conversations about pencil sharpening for 2026 and where we can manage costs and where we can be more efficient in our production. Where do you recommend producers focus? You've mentioned fertilizer. Is that the main starting point?
Yes, and fertilizer is expensive. That's not going to be surprising to anyone, but I think it's maybe people don't appreciate how expensive it is. We do some information or some data collection looking at the affordability of fertilizer, essentially how many bushels of grain is required to purchase 1 ton of urea, for example, or 1 ton of phosphate. And it is getting more expensive by that standard. A lot of that is the price of fertilizer has gone up, but also the price of grain, especially we look at, say, wheat, has gone down a little bit. So fertilizer is very expensive. How we manage our fertilizer, I think, is the low-hanging fruit to attain profitability in the upcoming year. When we look at the 4 R's of fertilizer, a lot of times we look at it from an environmental lens, but I like to look at it from a profitability lens and how we can choose how and when we apply the fertilizer to then try to achieve profitability. Because I do believe that those who manage their fertilizer well, the savings that they can generate on their fertilizer without negatively impacting yield might be the difference between making money and not making money in a year like this.
I guess that's where we, weather dependent, did maybe see a little bit more anhydrous NH3 go down this last fall for those reasons.
Yeah, and we look at, we have a 4R fertilizer profitability calculator online. We can look at the losses between the different timings and placements, because again, generally speaking, the closer you apply your fertilizer to when the crop needs it, and if you band it in the ground, there's less environmental loss, all things being equal. So we can use the properties of fertilizer to help us rather than hurt us, and using those advantages and essentially arbitraging the fertilizer can help us gain that those profits. And take example, say nitrogen sourcing. You talk about anhydrous. Anhydrous is about 15% cheaper than urea on a cost per pound bushel. So producers that have the ability to move between sources, that's a competitive advantage for them, because now they're not handcuffed to a certain source. They can look at the cheapest source on a price per pound, apply it, maybe save that 15%, which goes into the profit, and not negatively impact the yield, which is huge.
And that might actually be your profit margin at the end of the day, that 10 to 15% savings that you could find in fertilizer.
Yes, and again, it's about competitiveness. We like to think that we're all colleagues when we farm, and there's a camaraderie amongst it, and definitely there is. But when it comes to land and equipment, there is a competition factor to that. So if we can outperform our neighbors by being, say, smarter on fertilizer, and we can generate that 15% return, which is our profit, we have a little bit more that we can spend on land when it comes up and available for us. And just having that extra profitability just makes the farm a little bit stronger from a balance sheet perspective, and it just helps. And if we can find even just these little spots here and there and save a little bit here and there, that might be the difference between profitability and losing money on a year like this.
Finally then, Darren, this isn't maybe something that you touched on in your presentation here in St. Jean, but when it comes to land costs as part of this inflation story and cost of production story, FCC's reports aren't really showing any slowdown, but do you see in the bigger picture pressure on this trend of higher land prices, land costs, whether we're talking rent or purchasing land?
Well, land costs are a reflection of the profitability within farms, and it stands to reason that if we see a tightening in the profitability of farms, we'll start to see less appreciation in the land as well. There is a little bit of a delayed factor in that, but maybe one wild card is a few years ago we came off some pretty good times, and some of those producers that put money in the bank and built that balance sheet now can spend some money, and that will support values too. But at the end of the day, and I know there's been a lot of debate about land and if it's land overvalued or undervalued, is it going to go up or is it going to go down? I think the key is to look at that farm profitability. Land values have a little bit of a delaying factor when it comes down to profitability in terms of that appreciation in land, and that will essentially steer that ship as to what we'll see. Generally speaking, we would see a plateauing before we start to see any drastic moves like a 1980s event type of thing. But I think right now that our management level of our farms in Manitoba, coupled with superior seed genetics, and again we talked about fertilizer and superior fertilizer application and management, will always keep a certain profitability on these farms. So these farms are just getting better managed, which will then result in a better balance sheet, and that will always support land values as well.
Yeah. I think that's a good place to wrap it up, because I think 2026 will be a year where there is a focus on that management and efficiency and figuring out how to run our operations more efficiently. And your presentation and discussion today, very relevant and timely. Thank you, Darren.
Thanks. Anytime.
That was Calvin Hepner of Real Agriculture talking to Darren Bond of Manitoba Agriculture about some of the 2026 margin outlook, negative margins, I should say. Some pretty, I think, concern there for when you need that kind of a high of a canola yield to break even. Really need Mother Nature to cooperate for sure. And yield has not been our problem. We heard from Ted Seifert earlier on in the show from a U.S. perspective on wheat and corn and soybeans, for sure on corn. Production has not been the problem. It's the sales part of the thing that has definitely been a bit of a challenge, and we're definitely in a challenging spot here for 2026. We need to have our head on a swivel and bring our best effort when it comes to not only our marketing, but also our farm management. It's something we talk about a lot here on the show. If you have any feedback on today's show, I'd love to hear from you. Send me an email, shaney@realagriculture.com. And that's it for me here from Pasco, Washington. I'll be back tomorrow, broadcasting from, I think tomorrow we're in Sioux Falls, South Dakota. Thanks, everybody, for getting real and getting connected with Real Ag Radio.
Thank you for downloading this Real Ag Radio podcast, brought to you by new Averio herbicide from FMC. Active on tough and resistant weeds, including Group 2, 4, and 9 resistant kochia, Group 2 and 4 resistant cleavers, volunteer canola, and more. Averio herbicide delivers powerful, broad-spectrum burn-down control. See your local retailer today.